Hey everybody, I'm in my safe space. Hold on, I'm coming. Let's talk. I want to talk today. I want to talk to everybody. I'm not worried about the price. Don't be worried about the price. I'm not worried about it. Don't worry about it. I'm not worried about it. You shouldn't be worried about it. All right, ladies and gentlemen, Mr. Sadko here. Welcome back to the channel. Got a whole bunch of good news stuff for you today. Today, I want to talk about the falling prices. So let's go ahead and just open this on up to some coin market cap here. Let's get that going. Let's get that right on there, you know? So, I want to talk about how the Bitcoin price is falling, but mining is at record levels. And, well, that's a good thing, but yet at the same time, it's a bad thing. So, I got a whole bunch of things up that we're going to use today. I got my super ultra scientific Microsoft calculator. Nobody else has this on Windows, not to my knowledge, because I felt like I have a little bit of pool with Microsoft. So I got their scientific calculator. This is what, I mean, this is some large Hadron Colliders kind of stuff, okay? So Bitcoin is defying the trend of miners follow the money as price continues to unravel and burrows even below $6,000. Mining is as active as ever. So Bitcoin prices have been down 75% in the meantime. Hash power came online to increase Bitcoin mining by more than 300%. Hashing power is now more than 43 million terahash, 3 times higher compared to the levels at the start of 2018. 3 times higher than the start of 2018, and just, going on 6 months now. So the trend has accelerated in the past 2 months, while Bitcoin prices slid from 9,000 to 6,000 and below. Mining almost doubled its pace lately. So miners have shared that for some, BTC is getting worryingly close to break-even levels. So it is unknown what happens if miners work solely for profit without altruistic mining. So what is even more curious is that since the start of 2018, Bitcoin transactions have stagnated below 200,000 in 24 hours, consistently 4 to 5 times lower than Ethereum transactions with increased mining. Each transaction is much more expensive in electricity and equipment utilized. So because mining pays out, some believe it would stop the deadline in BTC prices. For some miners, break-even is a bit lower, though, at 4,400. This means that even at current prices, it may be slightly feasible to continue mining. So that's the thing. That's the thing to consider, is that, you know, some people pay more for electricity and some people pay less. So where the actual barrier for the bottom of the price that Bitcoin can possibly be, at least theoretically in terms of electricity prices, does vary pretty greatly. So I took a look at some geothermal prices of the average geothermal price of electricity, and that's usually where some big mining operations are, like in Iceland, and there's some in China, regardless of whatever they use. So there's all these different types of sources of electricity that these big mining operations are going on. So, you know, your graphics cards, my graphics cards, all of our GPUs, and even just if you own a couple ASICs, pretty much amount to nothing compared to some of these big, gigantic facilities that people are buying and just packing full of S9 miners. You can just Google that, and you can see just row after row after row just packed to the gills with S9 miners and other ASIC miners. Well, the reason why they can sustain that is because geothermal electricity power is usually 1 to 3 cents per kilowatt. Now, with those prices, Bitcoin can get pretty low before it's actually unprofitable entirely. You know, we may even be talking $2,000, $3,000. However, that's just not always the case in the world. There are some places that rely on coal power plants or wherever they're from. And it's going to lead to a big problem here pretty soon, because if miners start to shut down, especially these gigantic operations, miners are the ones that move transactions around, and they're paid to do that. They are paid to, you know, stuff the blocks full of transactions and shuffle them along. And so that's why you always hear that, you know, in 2140, when all the Bitcoins are mined out, Bitcoin miners are just going to be riding solely on Bitcoin fees in the transaction. So when you send your Bitcoin and it costs you $2, $5, $20, whatever it is, those go into the next block, and the miners get that next block, or rather it might go into a few blocks down the line. So right now, miners are supposed to get, I believe, a 12.5 Bitcoin per block, and oftentimes you'll see it as 12.7 or 13 or something like that, and that's because there was a lot of transactions during that period of time or just before that, and they're rewarded with an extra amount of Bitcoin, and it's spread out between all the miners in that pool. So let's take a look at some prices here, or rather at some profitability, and really evaluate what's going on here. So let's take a look at the S9 miner. So if we take a look at that, we can see it's making basically nothing right now. $4.22 for an ASIC miner. Whereas the Titan, or the 1080 Ti, nobody really uses a Titan XP for mining. If you actually go out and buy a Titan XP for mining solely, it's not a good idea at all. First of all, they're not made in the quantity as the other ones, and they're basically a vanity graphics card. They're really not more powerful than a 1080 Ti, to be totally honest. As you can see, the difference is about 8 cents a day there. So if you want to pay the extra $300 or $400 for a Titan XP just for mining, well, all the power to you. They're mostly just for gamers, for their vanity cards. And then you have the Titan V here, which, again, nobody's going to buy because last time I looked, that card was at least a few $1,000s. Something like that. So it's a little ridiculous too. That's sort of a higher end corporate kind of card for database and simulation and whatnot. It's really not for personal use, although you can. It's just a little too expensive. Anyway, so the S9 miner makes $4.20, 11 cents a day, and that's at 10 cents a kilowatt hour. So if you take that into consideration, you're really left with 86 cents profit for that day. And now there is one big thing we need to take into consideration with mining is that, yes, you might only be making 86 cents a day now, but you know, if you hold all of this coin for 6 months, even a year, and then you sell it all when, let's say, Bitcoin goes back to 20,000, if it does, then all of your coin will be worth well over 3 times the amount that whole time you were mining. So let's say you only mined $1,000 of coin in one whole year, you know, at those prices. And then the next day, Bitcoin goes all the way to 20,000 from $6,000. That's unlikely to happen, but let's just go with that example. It makes it a little easier. Well, then you didn't mine just $1,000. You maybe mined $3,400. So there's a huge difference in holding your coin and then selling it day to day. However, these big mining operations need to sell their coin day to day, or at least week to week, or at the very least, very most rather, a month to month to pay for their electricity bills, because they are pretty astonishing. Imagine having several thousand of these miners in a warehouse and mining. So 3,000, or you know, maybe $3,000 a day that you're going to be needing to cover, and you need to get that money from somewhere. So you have to sell your coin very quickly, or at least at some kind of reasonable rate to make that money back and keep your payments and keep your operation going. And not only that, you're paying probably a few people to help out, some network administrators or whatever to go around and help out and take those miners and ship them off when they go bad, and you know, maybe a connection went bad and they need to fix that. So you need to pay some people too. You're paying, you know, property tax, and you're paying rent and all the such as well. So it's not just the electricity you need to cover. You need to cover the rent of the facility that you're renting, and possibly property tax, maybe corporate tax as well. All kinds of things have to go into this. So if this price gets too much lower, these are just not going to cover it. So even if you go, you know, like right now in Arizona, where I'm at, the price right now is about 13 cents a kilowatt hour, somewhere in that region. Now in the winter, that's only for a few months out of the year when it's super hot and everybody's running their AC. In fact, Arizona is actually one of the lowest cost states for electricity, because we have the Hoover Dam and various other hydroelectric power around here. So it's actually kind of cheap. I think it's like the 7th in the nation when I looked up, so that's not too bad. So if I'm paying about 13 cents a kilowatt hour, now you also have to realize that, you know, just because you see this on your electricity bill that you're paying 13 cents a kilowatt hour, now if you go over a certain amount of electricity, this is at least in the United States, and it may be where you're from as well, so you have to look at your electricity bill. So when you go over your electricity bill, when you go over a certain amount of electricity used, rather, then they might actually crank it up to 14 or 15 cents a kilowatt hour if you use so much in a certain amount of period. In a certain period of time, rather. So now we're making $4.11, but now I'm actually losing money. I'm negative 12 cents a day. So I'm just paying this massive electricity bill to gain Bitcoin to possibly later sell it at a later date for when it goes up in price. Now that could be profitable and it would make all of that time worth it. But what we're still focused on here is not just the individual miner like you and I, but these major mining operations like in Iceland and China and these various places. I think they put one in a mountain in Kazakhstan. So you have to understand that not everybody pays just 10 cents a kilowatt. You might be in a state that's really high electricity. I think New York State is one of the higher ones. I know Washington is actually pretty cheap, Washington State. But it depends on where you live, and you may be paying even more than just 10 cents a kilowatt hour. So that's something that you really have to consider. So let's go to just 3 cents a kilowatt hour. For, let's say you had hydrothermal power. So that electricity is about 98 cents a day each, and you're still making about $3.13 a day on average. And that's not too bad, but if you looked at these prices, these profits a few months ago, and then a few months back, and a few months back, you would realize that the prices have going way down. I remember when in December, when the prices were all-time high, S9 miners were making $30 to $40 a day each one, and then even before that, when the difficulty was much lower, they were making even more or less. It depends on the difficulty, but as we just read, the difficulty is going up and up and up. It's just not stopping. Even though profits are way down. So we have a major problem here. So let's take a look at a 1080 Ti. I clicked on the 1070 Ti. We don't want none of that. And let's go to the average of 10 cents a kilowatt, which again, you might be paying more than that. So that's something you have to consider, is that you're making $1.41 a day on an item that costs $850, depending on which one of these you buy. And mind you, some of these will hash at a slightly higher rate than the other ones. Some of them might run cooler, and when your graphics card runs too hot, which is not usually a problem if you have PCI risers, but if you're the kind of person that wants to cram 4 or 5 of them in a computer without any PCIe risers, which I highly recommend getting PCIe risers, then they're going to overheat. And generally the 1080 and 1080 Ti, if they reach 82 degrees Celsius, they typically scale themselves back, and you'll see less hash rate. Not that much, but 20, 30 cents maybe a day back, from what you're supposed to be getting. And so these costs, let's just average it out with our super ultra mega scientific, extremely scientific. I can't believe how scientific this calculator is, by the way. I just want to reiterate that. It's just unbelievably. And let's just divide that by $1.40. It's going to take you 571 days at this current rate. 571 days to get your return on investment. And I know I said that wrong in like an episode or so back. I know what it is, but whenever I'm talking, it's kind of like you kind of have to go, and sometimes you don't want to just stop and like think about something that you forgot to keep going. So I appreciate the corrections, but usually I already know, like when you guys correct me and was like, hey, it's this, not the other thing. I'm like, yeah, I know that. I just, like, at the time, I'm just rolling, and sometimes forget things. So now, if the price goes up, that's going to take much less time. And I imagine the price is going to go up at some point. But on the other hand, if it doesn't, 571 days for your 1080 Ti. So, if you're not just gaming on this as well, and like also gaming and buying these graphics cards, there's really... It's getting really unprofitable. The profits are getting very low. So a lot of people, buy a 1080 Ti or two and they game on them, and that's fine because you're getting a lot of enjoyment out of them while you're mining, while your computer's idle. Maybe you go to sleep and you mine, and then you wake up and you start gaming. Maybe you have no life. That's your way to do it, and that's okay because eventually you're going to pay off your PC just by mining Bitcoin every night. But it's going to take a long time, mind you. That's 571 days of 24-hour mining. If you only mine for 12 hours a day, like maybe you go to work and you get home and you play some games and then you go to sleep for 8 hours or 10 hours, something like that. If you're only mining for about half the day, just double this. And it's going to take 1,142 days. So it's going to take a few years to pay it off at this prices. Again, if it rises, it's going to be a little shorter. So that's kind of the issue we have run into right now with crypto at the price is so low. It's not just, oh, well, the price is low and that's okay because I can still use the coin. It's a matter of that people are paying for electricity and they're paying for hardware in order to mine these Bitcoin, and they have to be at Bitcoin has to be at a certain level. It has to maintain at least a certain level for most of these people and most of miners like us to actually be making profit to make this worthwhile. And when it falls under that, some of these major miners could shut down their operations and start selling off their S9 miners and stuff. Well, that would reduce some of the hash rate, but it would come back pretty quickly. And it's always just going to snap right back for the most part and keep going up. Because if they go down, other people are just going to really take their place and take advantage of those 3 days where the hash rate the difficulty is much lower. And people will be getting, they'll be like, look, the price, you were getting $12 a day on our S9 miners. And then 3 days later, the difficulty kicks back in, and then you're back down to $4. So this is kind of an issue. Now, mind you, the S9 miner is not the most powerful anymore. I believe the GMO Japanese ASIC manufacturers is like a 24 terahash or something like that, or 23, which isn't double. So again, you're not even going to be making, so with even with 23 terahash, you're not going to be making even $10 a day. So it's better, yes, but you know, that's the thing, is that when you think we've tried so hard to scale our ASIC miners from 14 terahash to 24 terahash, it takes 7 nanometer chips. I mean, you'd have to have a big microscope to even see 7 nanometer chips. I mean, that's probably less than the length of a human hair, or equivalent, something like that. I don't know. But anyway, that's an incredible production for mankind to make 7 nanometer chips to get 24 terahash. So in order to actually get a lot of profit and get our profit back of $20 or $30 a day, you'd have to have something like 50, 60, 80 terahash ASIC miners, and that's not going to happen anytime soon. Maybe, just maybe, Bitmain is hoarding those until those profits go down, and then they're like, here's our 50 terahash miners, a year after we've already been mining on our own miners. Maybe that day will happen, but not anytime soon. If we had to work this hard to get 24 terahash miners, even a 100 terahash miner would only be, you know, $30, $40 a day, something like that. You could probably actually check. Let's see if we can, and just kind of calculate what we're looking at here. I think we just go to S9. Show custom settings here. So let's see what a 100 terahash miner would get us. So let's go ahead and just type that in, and we won't really worry about the wattage and stuff. We'll just do 10 US dollar. So if you had 100 terahash, you would still only get 29.57 a day, which is impressive. I wouldn't bash that, but that's on one miner at 1375 watt. In order to get that now, you're going to have numerous S9 miners, and again, 328 a day for the electricity of each one of them. So, moving on to some other news for the day. Jeff Garzik, who is one of the Bitcoin developers, I think he was back in the day, I'm not sure if he is still anymore, but he's kind of a prominent figure in crypto. His Metronome ICO sells 50% of the tokens to just 3 investors. Oh, that's not good. Don't do that. This is not good. So data from the Ethereum blockchain confirms the giant transactions, which appear to have angered potential investors who claimed they were unable to purchase tokens themselves. Now, one good thing that might do is they will hodl those tokens probably for a while, because they were likely venture capitalists with a lot of patience to hodl them for a year or two. And then it will have a lower cap, essentially, of tradability, and it might make the price raise, but when they go to dump those, goodbye Metronome price. Metronome, which Garzik initially revealed via his startup blog in October 20. Is that a Q? Is that a Q? Is it a startup block? Is it really a block? It might be a block. In October 2017, even though I don't know what that is. Anyway, is designed to be a cross-blockchain cryptocurrency, affording users the ability to swap between different cryptocurrencies, blockchains using the same coin. So, coming at the height of the Bitcoin community controversy over SegWit, which Garzik endorsed, Block nonetheless claimed Metronome would constitute 1,000-year cryptocurrency, in 1,000 years. Thinking 1,000 years ahead, I know it's a positive thing, but in 1,000 years we could figure out the multiverse. I mean, seriously, we could have our neutronium rings connecting wormholes, and we might be in a total society where we don't even need cryptocurrency. You're gonna have to hook up the internet to space. We're gonna have to have gigantic satellites that shoot at super speeds across space for this cryptocurrency. I really doubt this is a 1,000-year cryptocurrency, but I appreciate the positivity. Institutional investors should be very excited to see something like this in 1,000 years. So, you know, not a good thing that an ICO sells 50% of its tokens to 3 investors. That's really centralized. It might not be a centralized platform or something like that, but that's not good. Don't do that if you hold an ICO. Try to space it out. It works a lot better. Economics. Just talk to an economics. Walk into your local college. You'd be like, hey, is it a good idea to sell everything to just 3 people? They'll probably be like, oh, no, it's probably not good. It doesn't spread it out very well. You'll go, okay, thank you. New data shows no evidence of Bitcoin price manipulation as whales hodl. I'm sure. The findings uploaded to Twitter by commenter and researcher Bamboo Club June 25th focuses on so-called Bitcoin days destroyed, BDD, they just made this up, as a variable by which to judge investor sentiment, which he explains is totally unaffected by Bitcoin price. It's totally made up. In line with other recent research pieces, BDD trends from Bitcoin's creation in 2009 to the present day demonstrate that more Bitcoin hodlers, holders in this case, are storing rather than trading or selling their Bitcoins. Oh, so that's manipulation? What? What? I gotta do a double on that one. How does that have anything to do with manipulation? Just because you're holding the coin? Wow. The trend runs contrary to opinions in many mainstream news media pieces, which claim Bitcoin is a bubble, or has had its halcyon stage and is now only disappoint or even defraud investors. I don't know about that, but BDD fell sharply on June 18th, has fallen throughout 2018. This does not fit the narrative that whales are out cutting and running for the exit, selling to noobs. Whales are in fact hodling. Oh, okay. Okay. BDD is a calculation for each Bitcoin transaction based on the number of coins it contains, multiplied by the number of days those coins remain unspent. How does that have anything to do with manipulation? Let me show you manipulation. Let me show you what that looks like. Oh, geez, what are these walls all over the place? What are these immediate sell walls? People selling in enormous amounts. Now, that might not be exact manipulation, but one of them sure is. I wonder which one it is. Look at all these little flat walls. Boom, boom, boom. It I mean, you're just hitting a wall, and somebody's going bam, 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 hitting that market sell and market buy and market sell over and over and over, and just making the price go woo all over the place. And then the CME futures and how it just went, oh, the futures are out. Everybody futures are out, boom, and it just never recovered. I wonder, and that's just the beginning of it. I'm sure a lot of other people could show you a lot of other manipulation. So get out of here with your made-up BDD. They're talking about hodling here. What are they talking about? How does that have anything to do with it? Coinbase. Over 100 pages of SEC complaints reveal fraud allegations. So I like Coinbase. Coinbase has never messed with me, and GDAX, I've never had any problems with them. I know other people have, but I've literally, I don't think I've ever had a single problem with Coinbase or GDAX. I put money in it, it goes there, I transfer coins in and out. It works, and it's actually a lot faster than like Binance. If you transfer Bitcoin, I dare you to transfer Bitcoin to Binance. You're gonna be waiting. It's gonna be about an hour. But if you transfer Bitcoin from anything to Coinbase or GDAX, it's a very, very short period of time. Why? I don't know. Depending on what kind of networks they use. So Coinbase not ready for its own success. The criticism was documented by a 5-month Freedom of Information Act, which comprised a total of 134 pages of complaints filed by users of the exchange with the U.S. Securities Exchange Commission, the SEC. Obtained the complaints received by the SEC and the California Department of Business Oversight filed by users of the leading U.S. cryptocurrency exchange. Widespread frustration with the platform as evident as customer service fails across the board. Now, admittedly, their customer service is trash, but I've coincidentally never had any problems with them. However, this is not the first time Coinbase is under the public's crosshair. In December, traders accused Coinbase of insider trading following events of the failed Bitcoin Cash launch on GDAX. That was really grim. That was bad. In March, the exchange was also hit with class action lawsuit for violating California's unclaimed property and conducting unlawful and unfair business practices. So instead of painting a picture of a leader in the cryptocurrency exchange industry, the documents reveal Coinbase is a company that's unable to handle its own success. A recurring theme in most complaints is the notable difficulty for people accessing their funds due to various problems. Some have been locked out of their accounts, and others face major roadblocks when trying to transfer funds between different wallets. So here's somebody who says, I've sent $17,023, I'm assuming that's dollars, from my Coinbase account to another Coinbase account on 12/21/2017. The other Coinbase account never received the funds as of 1/16/2018. I contacted Coinbase over 7 times, and all they say is they have so many issues they will get back to me, and it has been a month. The same customer shared his concern that he's lost $5,000 as a result of the investment, and has made allegations the company's holding my funds to make money on top of my investment. Okay, those are just allegations. Let's see some proof of that, but all right. Not defending Coinbase in that instance. That's a very horrible thing, but I'm just saying. So the spokesperson added that the company improved its customer service substantially by increasing the support team by more than 150% and reducing the average time for first response to below 10 hours for more than 95% of the incoming queries. Oh, it's below 10 hours. Just don't worry about your tens of thousands of dollars. Just sit there and sit there and boil while you're worried about your $10,000 for 10 hours while you're trying to get a hold of somebody. I like how they say more than 150% instead of saying an actual figure of how many people they've hired. Because let me just tell you, if you had 2 people and you increase that by 150%, wow. You got like 5 people now. Awesome. You know what I'm saying? It depends on how many customer service representatives you had before that. That matters how much 150% increase is. If you had 100 and then 158% increase, that's okay. That's quite a bit of people. But yeah, if you just had like 10 and 150%, now you got 25. I don't know if that's a lot. But moving on here. You know, they're an $8 billion company and just can't seem to hire any customer service. That's so hard to do. So a new breed of ransomware popped up, claiming to be the ever-famous WannaCry malware, but it has a rather lazy and anticlimactic twist to it. This new ransomware, much like WannaCry, demands a ransom in Bitcoin to prevent the deletion of victims' files. Uh-oh. The twist is it doesn't do anything at all. It just doesn't do anything. The lazy hackers that developed this malware built it to be a WannaCry copycat to ride on the coattails of its success. But the email it sends doesn't encrypt anything. Instead, it uses a form of psychological pressure on its victims to attempt to convince them that they'll suffer consequences for not paying. So the WannaCry emails are designed to cause panic and trick you into believing your computer's infected with WannaCry ransomware. In reality, the emails are just a phishing exercise to try and extort money. The emails claim that all your devices were hacked and your files will be deleted unless you pay a fine to the fraudsters in Bitcoin. So people who receive this email are advised to just delete it, report it to competent authorities, if you feel like it. Nothing else happens after that. There are no files installed on any device that must be removed. So if you guys get a WannaCry email saying that demands your Bitcoin, just delete it. And give them the old super bird. This one in the middle. This one. And then just delete that email. And then give them the bird and then delete the email. Give them the bird. Delete the email, give them the bird. Your choice. Anyway, let's move on to CoinMarketCap, see where we're at. Woo! $225 billion market cap. Still not doing too hot. We have a little bit of green. Everything seems to be in the green, actually, so that's okay. So things are moving up. But as you can see by this graph here, not the first time. So it goes up, it goes down, it goes up. These coins are all over the place. JR business. Whoa, these coins are lit. Ripple's going to be the most decentralized cryptocurrency. They just keep going up and then down. What am I saying? All these coins are lit, bro. Or is that what cool people? I don't know. Is that what cool people say? I don't know. I'm sorry. But so we keep seeing these gigantic whale purchases that raise it like $400. This huge market cap, well, kind of huge, Bitcoin, by $400 in just like obviously just a few minutes. You know, so somebody's buying a big chunk and then other people are riding on that. And whenever you see these big chunks, sold, bought, and then later sold, and then it goes down, bought, and it'll just end up going down again, likely. So I hope it's going up, but don't hold your breath to it. You know, the price is really low right now. You know, keep on buying. If you see it 5,800 again, that's definitely a great time to buy. I would say it's a good time to buy now if it goes to 20,000. But at this point, there are no certainties in Bitcoin. All of the price predictions that you see, wouldn't pay attention to them. I wouldn't pay attention to my own price prediction, which I said 25,000 to 35,000, which I know is a pretty big estimate. But I'm thinking about 25 just because of the last year's all-time high, and it usually increases in the Q4 of the year, like winter, and then it screams upwards pretty much every year. You can see it every year, and then it dips sometime in January or the beginning of February, virtually every single year. And I've made numerous videos on that showing that dip every single year. But no certainties in the crypto world. So just keep careful, keep on buying, and make sure you set your own goals, when to sell, when to buy, and you'll do just fine. But I hope you guys enjoyed this episode, and as usual, I will see you guys next time.